Welcome to the REI Hacker Podcast, where we unlock the secrets of real estate success. Join us as we dive into the journeys of top investors, mentors, and industry experts. And now, let's hand it off to our host, Benson Juarez.
Welcome, everybody. Thank you so much for being here on this edition of the REI Hacker Podcast. I'm really interested in speaking with our next guest. His name is Kenton Johnson. I've known Kenton for many years, on and off. Well, we worked together back in 2015-16 for a bit. And Kenton is a 40-year independent businessman. He's been in all different types of business. He's worked with the government. He's worked with small and large projects. He's an expert in marketing and sales and real estate, both from a technical and non-technical perspective. And so I wanted to invite Kenton on because he's got a wealth of knowledge in all different verticals of business, and he's got a lot of great stories too. So Kenton, thank you so much for taking the time and being here with us today.
My pleasure. It's great to be here and great to work with you more closely again.
Yeah, it's been good to catch up with you, and we see each other from time to time. And I still get your newsletter that you send out, which is overwhelming in my opinion. There's just so much good information in there, and you're always, working on something exciting. But your career spans decades in such an incredible range.
Well, thank you.
Going way back.
I'm blushing, I think.
Yeah, going back to the late 60s. You were in the government, you had top secret clearance, you worked at NORAD, you've done building projects and real estate stuff. Like, I don't even really know where to start, but how about we start back in the late 60s when you got involved in business back in California?
Well, the California was actually not as much business; it was more jobs. But
Okay.
I did have the privilege of working in some really hot projects. I stumbled into some, and then I demanded others. Okay. I went to San Jose State, and I got to tell you, one of the things that sort of set my mind on everything was I played the trumpet. And I'm in the San Jose State Marching Band, and it's a hot band. I mean, it's one of the more popular ones. And I'm standing next to a saxophone player who plays the trumpet during marching season. He plays an octave higher than I do. And so I said, how the heck do you do that? I've been doing this since the third grade, and I can't blow a constant high C above staff. And he says, I don't know. He went through some things that he talked about. And he says, I just blow my brains out the end of the trumpet. Okay. Now, that doesn't mean something until you think about what I've been told the whole time. And that is, it's a process, is pushing from your diaphragm, but not the goal. The process versus the goal. The goal was to get the air out there. Guess what? The next day, I was blowing a double C with no problem.
So it was more of a mindset thing.
It was just it was a mindset thing. So in other words, focus on the goal, the process will follow. Okay.
Right.
So I happened to stumble into the first computer-driven traffic control system in the world. Happened to be in San Jose. Okay.
For air traffic control.
No, auto traffic control.
Auto traffic control. Okay.
This is 1967. Okay. And so at that point I said, man, that's a hot project. And so when I went into the Air Force, they wanted to assign me in a really dumb job. It was basically an administrative job, computer breaks, pick up the phone, call in whoever's manufactured the thing and say, fix it, and hang it up. And then you get all the garbage jobs in the squadron. I said, no. I'm telling the Air Force, no, that is not what I want for me. And so the lesson was, and so I got assigned to a really hot project, the SR-71 spy plane.
Oh my gosh.
I was doing the software
The
for the
Blackbird.
electrical intelligence. It's called. It's basically the waves from the SAM sites. I mean the SAM missile sites. Okay, the radar. That's what I'm trying to say. And so I had to analyze that. And as you go by, the waves get a little different. And you can tell exactly where it is. You see. So that was
That
a
is,
hot project. A
oh
hot project.
yeah.
So
At
that's where I
that
got
point
the
in time, nobody in the earth knew about it, right? Like that was all happening
Eh,
at
they,
at a
it leaked
top
out.
secret level.
The test. I remember a Time article was testing about. It goes Mach 3. Flies over Vietnam and was finding all the SAM missile sites, and then we'd send the bombers over and they blow them up. Okay.
Wow.
Now sometimes there was nobody there, and they'd already moved the SAM missile site. But the point being is I had focused on getting that, getting something hot.
Hmm.
So then I get it, you have to have a top secret clearance, special intelligence, as a matter of fact. So when I got out of the Air Force, which was pretty quick because Vietnam wound down, I went into aerospace into NORAD Cheyenne Mountain, another hot project, keeping
Hmm.
track of all the stuff in space. So if something new comes up, they can say, hey, we got a new missile coming at us. Okay. And either, duck or blow it up, one of the two, if you
Yeah.
can. So 3 hot projects, boom, boom, boom. And I think that was because I focused on finding the hot project.
So you had a sense of what was going to advance you career
Yeah.
wise and keep you stimulated because you didn't want to get in some administrative job being bored and not really growing, right? You could just sit there and
No, no, no.
stagnate. And they're going to give you like these, promotions from time to time. You may make rank. You're probably like enlisted, right? Were you an officer
Yeah.
or enlisted?
No, I was an officer, and because of the fact I went to grad school, I was a first
Okay.
lieutenant within 6 months. So, uh, and because I had time in grade. But then after that, I became the internal consultant at the Denver Water Board. And
Mm,
so I was basically training the whole world, everybody in the Denver Water Department how to use this new big machine. See, so
mm,
opportunity, 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 and a fourth opportunity came up as I went into private consulting. University of Wisconsin called me up and said, "Hey, I see your newsletter here. That's cool. We're training engineers. We want you to talk about computers, all these new." This was just before the IBM PC, and I said, I really going to need some money for this. And they said, "How much do you want?"
suddenly you got a blank check.
Yeah. So again, I said, I'm not going to beg for it. I'm not going to do $500 a day. I said 1,000. He said, okay, what else you want? Can I wholesale your newsletter out? Okay.
They
So
wanted to wholesale your newsletter.
yeah, he wholesaled a newsletter for about a third the price. Then I got the renewals at full price. See,
Wow.
so he
So
gave
way back when you had a sense of, okay, I'm not going to just settle for status quo, right? I'm looking for these
exactly.
opportunities to
Yeah.
help me grow. Did you, I mean, the newsletter was more like an entrepreneurial element, and the other things were more kind of corporate, right? Like even like the government's not corporate, but it's in that same vein. At
Yeah.
what point did you start to become more entrepreneurial?
Well, that was the time from the water department. I was a consultant, so I just became an
Hmm.
independent consultant.
Okay.
And I happened to start thinking about that early. So I had about 4 clients before I left the water department. But the newsletter was actually as a function of somebody said how to market. So it's a
Hmm.
newsletter on small computers for engineers since I was an engineer. Okay. I'd gotten myself registered as an engineer. There was a lot of computer questions on the test. I didn't realize that. It wasn't just thermodynamics and mechanical engineering. It was all this other stuff. So that gave me the creds to be able to write this letter for engineers. See, And then, of course, I've got this newsletter going out there. And then, of course, I'm getting called to do conferences. And then I'm doing webinars and seminars all over the place. And so that was just, like peak time, kick, kick, kick. And I just loved it. And again, it was because I realized that I had to focus on what would really be good for me,
Right.
but also for a whole lot of other people is what had happened. Okay. See, so by being good to me, I was good to a whole bunch of engineers and taught them about small computers
Mm-hmm.
and taught them about how to use spreadsheets to write little programs on how to do computations so that you could do things quickly as opposed to having to write a whole bunch of what the language was then is Fortran to do that, which is, kind of a whole subscience.
I
But you
learned
could do it
Fortran
on,
my
yeah,
first
you
year
could
in.
Fortran. Yeah, I was a hot on that myself. But the fact is, doing it on a spreadsheet, boom, you can have it done in an afternoon. You can have it done in an hour.
Mm-hmm.
I put together a quickie analysis for any kind of property in about an hour, hour and a half. And
Wow.
that, with all kinds of parameters, and you could plug different things in, different costs and different incomes, et cetera. And boom, you find out whether this thing is even worth looking at any deeper than, getting a few numbers together. So,
So let's talk about that. So at what point did real estate get on your radar?
well, that came pretty early, and it was because I got kicked in the teeth.
Okay.
And that's another great story. So I was, my dad actually went into real estate after he retired from the Air Force. And so it was kind of sitting there in my head. And I thought, there's real estate. This is from what he was talking about. Sounds pretty good. So while I was a junior, I bought my first condo. And I had a wife at the time, so me and my wife moved in and eventually had a child in that place. But instead of finding a property manager, okay, and then renting it out, I said I've got to go in the Air Force, and I think I'm going to go to Washington D.C. from the types of things that I've been hearing. So I'm going to just sell this thing. So I let some guy assume it from down the street. Dumb, totally dumb. In that time in San Jose, that $16,000 condo went up to $80,000 within 2 years.
Wow.
That was the kick in the teeth, and said to me, must be some other ways to do this so that I could have made that money myself. So leaving that $64,000 on the table told me that there's some things that I can do. So as soon as I got the opportunity, I bought my next place and rented it.
Was that
Moved.
about the time that Silicon Valley was starting to blow up?
No, that wasn't quite, we weren't there yet. Now,
Mm,
Microsoft was hot, but they were in Seattle.
mm,
Okay. But we didn't have the Googles and we didn't have the Facebooks and we didn't have all of that kind of stuff. No, I was
right.
close to it, but it wasn't hot then.
Got it.
So
So your
the
next property then that you bought was the one that was like your next true investment.
well,
And
yeah,
that
because I bought it, lived in it, and then moved to the next place and rented it out. Okay.
gotcha.
No, I didn't keep doing that because after the second one, we had to consolidate that and move to a much larger house. Um, so it wasn't it wasn't smart. I wasn't being smart at that point.
Okay. Well, at what
But
point then did you really start getting into real estate then as an
well,
investment
so
strategy?
when my father died, he had some money, languishing at 1.5% in some accounts, and we wanted to make sure that mom was going to be comfortable in
Hmm.
her, when she gets to the point where she had to go into some sort of a place that's going to cost 6 grand a month. Okay. So I said, how are we going to take $175,000 and make that last for 5 or 10 years?
Right.
Real estate.
Yep.
Okay. So I started buying, bought a couple of houses in 2005. Another kick in the teeth. You know, when the crash started,
Yeah, right around 2006.
Actually, yeah, between 2005 and 2006, uh, that neighborhood went down 22% because of the REOs.
Mm,
Uh, well, I didn't feel too bad because Boulder went down 18%. People may or may not know Boulder, but Boulder was hot property.
yeah.
Hot property. South Boulder went down 18% that year. So I said, maybe this isn't the right thing to be doing right now. So I went off into Forex and I did some other things, and and I was looking to do some wholesaling and some things to do quick turns
Oh
to
yeah,
make money.
just something that
That
can generate some cash.
yeah,
There's like some long-term sort of passive income strategies that will provide you a small amount per month, right? Like a rental property, and then that's
well,
great for
the
wealth.
rental properties all went back to the bank.
Oh,
It
for you,
crashed. I mean, it
yours.
seriously crashed.
Well, a lot of us
Yeah,
experienced that. I had the same thing on a few properties that I was holding as rentals as well. And back then a lot of the strategy was to, take money out, cash out, take that money,
yeah,
leverage it as much as you can. The bank will allow you to take that money, do the next
yeah,
property, right? And that was a pretty, popular strategy at the time. So I certainly wasn't prepared for the downturn. And, a lot of people were affected pretty
yeah.
negatively. And it affected me for years after that. Like I was gun shy
Oh yeah,
for
yeah,
many
yeah,
years.
yeah. I was well, my brother was totally ticked. I'll tell you that because he saw that, his half of 175 bucks just go 175,000 go out the window
Right.
because I was in the middle of a rehab on one and I found out that there were
Mm,
certain things that weren't being done correctly. And so we had to, rather than do that, I was going to sell it to a contractor. And then the other one, a couple of bad rentals and then I said, well, I'll just fix it up a little bit and sell it. Okay. And we'll get out of this crazy area here. Um,
right.
and that didn't work either. And then the bank, I actually found a renter. He's a guy who lived with his sister down the street. And he said he would come in and be enough, would be extra couple $100 over the payment. And I said, oh, I'll send everything to you. We'll catch up. We'll get this done. We've got a nice renter. And the bank said, no. I said, well, then eat it.
Yeah.
It's my mom's credit. It's not mine.
Yeah,
And
a lot of
she's,
people made
and
those same decisions just to walk away. I should have done
yeah,
it sooner. For many months, and even a year plus in some properties, I was just paying out of my own pocket to keep things afloat. But I was
yeah,
basically just
right.
throwing money at the fire.
So you don't think I'm wasting my mom's money. She was going to go into an old folks home. Um, she was about time to go to my brother's and my brother couldn't take care of her. I was taking care of her at home. He was going to, put her into an institution of some kind. So, I figured, well, she doesn't need credit at that point. And
No, no,
actually,
she doesn't.
she went on Medicaid because the money was gone.
Yeah,
She didn't have that money that we were hoping to have. So um, it worked out. Medicaid worked out fine, and she lived for another 5 years there. So
that's good.
yeah,
So you learned
and
some lessons from that.
boy
And
did
then
I,
you moved
boy
on to some
did
bigger,
I.
better things. And
Yeah. Now,
like I said, I still get your newsletter, and there's always something you're promoting on there, right? So what are some of the exciting projects that you're working on right now?
well, the there's a couple of exciting things, and let's be clear about the newsletter. The first newsletter was on computers for engineers. The second newsletter is basically on commercial real estate. Okay, and it's
Hmm.
technology. And I use a lot, as you notice, and I believe very much in the concept of you gotta you gotta give information first, and if there's any promo that comes along, that's got to be secondary. Now, if it was a
Right.
lot of emails, it's info promo. You see,
Yeah, you want to
so
deliver value, build
yeah,
trust.
I got it. Yeah. So at the beginning of the newsletters, you'll see that I'm basically repeating some of the summaries that I've done on LinkedIn and ones that I've come up with, then I put those in there first so people can, I mean, if you only got 10 minutes, you're going to read, a bunch of great summaries.
Mm-hmm.
And I use GPT sometimes to make the summaries from a video, for instance. And then I make sure that it makes sense. You always got to
Yeah, you want to
check
go
out the
back and
GPTs.
just check
So,
it. Yeah.
so the big hot project. So I just wanted to clarify that and what the newsletter is all
Yeah, I'm glad
about.
you did because you transitioned at one point from an engineering focus to more business centric real estate technology.
Hmm. Yeah. And so I've gone through about three stages there. One is in the loan side. Well, I actually would like to take a little step back. One of the things that I learned is in the early 90s, I joined a business group. And
Mm-hmm.
the business group was really focused on raising money for startups. So they taught us, went to week long forums, and we'd have all these classes, and we'd team up and we'd work together, and we'd, get the startup going. Okay. So in that, we learned about how to raise money and do it right and do it legally. Okay. For ourselves, not as a third party, but for ourselves. And do it as a team. So I learned two very important things. One is that the team can make or break a startup. Okay. You get the right team and an energetic, collaborative team, not somebody who's just, okay, well, we'll get to work on it. Let's make some money and well, where's my check? That kind of thing.
Right.
You don't want to have that attitude. It was very collaborative. And then how to raise the money. Uh, for instance, one of the things was you give a great deal to the first two or three, and then it's kind of normal after that. It's the kind of the A shares and the B shares and the C shares.
Yeah. So you
What?
incentivize with equity.
Yeah, and
They're
see
taking
what.
some risk with you up front, but they get to participate in the back end when this company will eventually go public or have an exit of some sort.
Well, that's another part of it, but the first part is, okay, if I come to you and I say, if you're the first guy on the door, I'm going to give you 3% for 100 grand. Uh, the third guy that comes in the door, he's going to get 2% for 100 grand.
Mm.
And the fifth guy or the 10th guy is going to come in for 1% for 200 grand, for 100 grand. You see, that was the idea, is to give people some incentive to get on it and get on it good. Okay. So we're building teams, we're
Hmm.
making incentivized fundraising, and then what kind of cool projects? Well, so I got into where I was consulting not only these guys but anybody else, and was formed a meetup, and it was called Startup 2.0. So the concept is to really focus on the things that I had been learning, and thanks to Bernie Dorman and the guys who did Chicken Soup for the Soul, Canfield, and what was the other guy? Anyway, there's Mark Victor Hansen. There we go.
Okay.
And so they were actually speakers for this group. A lot of other
Oh,
good
nice.
speakers too. We've had some pretty hot guys come and speak to us. Well, so so now I was learning about the financing side, financiers, and also lenders. Because what I saw was happening is there's too many people who are using equity money for things that they could actually collateralize and buy with a loan. It's easier, you got all this money coming in from investors, and you say, okay, now I need a computer, now I need a car, now I need some desks. And so I was doing two things. One is, don't ever use equity money for anything that you can collateralize. It's just way
Mm.
too expensive. The second thing is, hey, why don't you buy a building and rent out 3/4 of it to other startups who aren't thinking as smart as you.
Right.
Okay. And so and so then the question was, who are the lenders who are going to lend to a startup? I said, well, if you buy a building, you can use hard money for that,
Hmm.
because they're looking more at the building as opposed to you. You know, you may not have that much income and your FICO might be hurting and your debt to credit ratio probably sucks. So yeah, you gotta, you know, let's buy a building and then and get some guys to come and commit to write a lease and say that they're going to lease from you. Okay. Now you've got the potential for cash flow and you've also got a building. So the whole 9 yards is going to work together. And they said, cool, who's going to do that for us? So then I had to find the lenders, right?
Mm.
I can't just say, go find a lender. I had to find the lenders.
Sure, you had to get
So
the
I,
proof of concept.
so I became a loan broker.
There you go.
And then after a while, I says, man, I can do a lot more. I can spend more time loan brokering and more time marketing the loan brokering than marketing to actually fairly penny pinching startups in the tech world, especially. Okay. I made a joke as I said, you take a quarter and a startup will take a quarter and rub the silver off and squeeze it to death so it looks like a penny.
I've been there. I know how
Yeah,
it
yeah, me
goes.
too. Yeah,
Mm.
I did.
Did
I've
you
done a
work
few.
with any notable startups that did well?
No, not any big time. You're looking for the the supermarks here. My supermarks are coming now. Okay,
Hmm.
because last year, well, first of all, as a loan broker, I knew a lot of investors. I joined the Rocky Mountain Adventure Club uh, and worked with uh, the leaders of those clubs. And one of the presidents, um, whose name escapes me, Jim. Anyway, he would write PPMs for people for $5,000. But as soon as they contracted with him, he was allowed to tell them about investors. So he said he'd open up his Rolodex and said, okay, go see George, Pete, and Sam, and they'll probably be interested in your deal. Because I know I'd be interested in it. See?
Sure.
So I said, oh, is that legal? Yeah, you can do that because you're under contract with them. Now they're clients. It's not like you're a third party fundraiser.
Yeah.
See,
Brokering deals and not being
broken.
licensed to sell securities.
See, he's just giving them away
Mm.
because they've contracted with him to do a PPM.
Did he
So
get any sort of a commission or a kickback in doing that? Like,
not at all. Good,
mm,
lots of brownie points, but that's about it.
sure.
Okay. So and so I said, I think I could throw that into my loan brokering business. So if you contract with me, you write an agreement that, it's no guarantee that I'm going to find a loan that you love, but if I do, you're going to pay me X%, right? 1.25, something like that. So I will give you one vetted investor per month. So in saying that, guess what? I had to find investors ready to
Mm.
go.
Yep.
So now I got the lenders, I got the investors, I got the whole 9 yards. And so last year, I was working with a company and they were trying to do something that was obviously, it's not an equity deal. I mean, it's not a loan deal, it's an equity deal. You're not going to get anybody to lend you anything because your equity is just kind of flaky,
Mm.
but the possibilities are massive. Okay. It was a gas deal out in West Virginia and the owner of the properties was not being very forthcoming about uh, the comps as well as where the property was. We kind of figured it out, but she wouldn't verify it. So I said, you just got to get some guy that, willing to take a chance and come in there, plunk his first million down, and then she's going to open right up. Now you're real. And it was a partnership. And so we set it up to where it was legal. But I could find the
Mm.
money for him. So then I said, oh, okay, well, I like this. So I started talking to some other people about being, finding moneyed partners. If you're finding moneyed partners, it's not an SEC deal. As long as there's not one, as soon as you get the first passive investor in there, it's an SEC deal.
Mm.
But if you stay out of that, okay, like when you're raising for privy, I don't know if you raise money for for that deal or any other thing, but as long as they're partners, active partners, bringing the money is not an SEC deal.
Right.
Okay. So I said, that's the way I'm going to work it. I'm going to find moneyed partners for any deals that I can. Well, then I run across, you talk about a hot deal. I ran across a thing that's actually being done a lot more than I realized until I got into it. And I've been going through and actually I used GPT, not GPT, but I used an AI to go find more people who were doing what's called brine mining. Okay, you
Okay.
take a volcano, it's extinct now. It gets filled with water, right? Well, all of the minerals in that lava are just like right there. And that water becomes mineral rich. And then it soaks into the groundwater, and you dig a well around the edge, or sometimes even pull the water right out of the lake. And it's just very mineral rich, and it's full of gold, silver, platinum, lithium, lithium, and a bunch of other metals. And so I found this one company that knows exactly how to process it. And you can do this in something that looks like a 4-car garage.
Hmm.
You dig the well, and you just, have this building that looks like a 4-car garage, and you're off making, pulling
Interesting.
lithium, gold, silver, platinum, and all those good metals. And it is a very, very profitable arrangement.
Did that
But,
project actually launch? Are they currently mining that brine?
well, there are a lot of companies around that are mining just exactly like that. Okay.
Hmm.
These guys want to work the Southern California, the Salton Sea. Okay. And they have the chemistry and all the expertise to do that. They need $35,000 to do a gold version of that, and 65,000, I'm million, excuse me, million
Okay.
to do the gold and the silver. I mean, gold and the lithium. Lithium is a very light metal, so it doesn't, in gold and silver, you just basically run it along and let it fall down in the right way and then extract it. Okay. Lithium, you have to go through a completely different process. It's a
Oh
chemical
yeah.
process.
Lithium's a hot topic right now too.
Oh yeah.
I mean, that
Um,
whole thing about, the Chinese and them controlling battery production and, all the huge demand
exactly.
for EV vehicles here in the US and potentially mandating it within the next,
Yeah.
five,
And
10 years. Like lithium's already valuable.
oh, it's very valuable. And you take a battery, and it's not just EV. We're talking about if you're going to have anything that's not, has ready power like gas or oil of some kind powering a power plant that's always there. You got a tank full of it, you run it in, you burn it, you make energy. Okay. Make electricity and it goes out. You've got to store it. Wind, solar, anything that's going to not be there every second. You've got to
Mhm.
store it. It's required. So what does that take? Big batteries. And what does
Yeah.
that take? Lithium. Okay. So it's very, very important to have that storage facility. All right. Now, the uh, there's another philosophy about that too. So, but we won't get into that here. But the point is that is a hot deal, and I had the advantage, opportunity back in 2010 to put together a group of people, a geologist and two miners, and one of the miners writes the reports on everything, measuring and putting the measurements together and also planning it out to how you actually mine. And he could do everything from hard rock mining, open pit mining, and so could the geologist. So I have those
Yeah.
three people on my team. And so I learned a lot about the mining world, the
Yeah, you really
reality
dove
of the
head
mining world.
first into that deal.
Yeah.
I mean, you really dove head first into that deal
Boy, did I.
because, you were kind of on the periphery, right? You were like fundraising, but you built a team
Yeah.
to help bring in probably, increase the value that you were bringing to the table. And it would make it easier for you to help bring money to the table too. So you could get potentially some equity in that deal, right?
Right. That was the concept. And
Yeah.
the concept is to um, have a team that knows what the heck they're doing. I mean,
Hmm.
30 years experience in each of their areas, whether they're, getting dirty in the mine, uh, processing it, writing reports, or the geologist to say whether it's worthwhile. And
Yeah.
actually, that geologist used to live in the bedroom right next door here.
Oh,
Uh,
wow.
and so I'd show him a report and he'd read it. And sometimes he'd write, excuse me, bullshit across the top and just leave it on
Hmm.
my front door as he goes to work at 5 o'clock in the morning. And then he
I mean,
moved
there's so
back down.
many.
He's just a mile down the road now. So
Yeah.
he was just in between. He was in the middle of a divorce, so he had to have his room.
So you
Um,
come across these deals though, because you're out there, right?
yeah.
You got your newsletter and you're building your network and you know, and this is the thing that people should listen to is that like you're never going to come across deals, opportunities, whether it's a business deal, an equity deal, some sort of opportunity to fund someone else's opportunity. If you're not out there, like you got to get out in the mix, like you're part of this business group and you got your
Oh
newsletter, you're
yeah.
doing all these things. And so people are often, I hear people, complain all the time. "Oh, I just can't find enough deals." But yet they're sitting at home behind their computer, just doing the same old thing, right? So, what would you advise the people that are out there who are looking for opportunities? Like, what are some strategies, some methods that you've learned over the years that can help them get in front of more opportunities so they can take advantage of them like you have?
Well, there's several ways to do that. One is in person. For instance, Denver happens to have one of the biggest startup weeks of in the country.
Yeah.
There's 30,000 visits. 30,000 people come from all over the region here and go to this startup. And so I sort of weed out the starry-eyed tech startups, unless there happen to be in commercial real estate. Okay,
Hmm.
then I really want to court those guys. See, that's the second part. Since I'm an old tech guy, it's the commercial real estate side, but also the software to support that. Okay, so those I mean, it's like, hey, what are you building? That's the first question. How you doing? Not,
Hmm.
hey, how's it going? You got a wife and kids and stuff. Sure, I learned that along the night. But I want to find out what they're building.
Yep.
All right away. Now, this that's one way to do that, and then I go to a couple others. You support IROC and IRROC, which are Rockies in investor clubs in real estate, and I go to both of those. Okay, and I like the kind of the quarterly IROC deal that they have up at this big center up here. So I get a chance to get to know these people and build a know, like, and trust.
Hmm.
But I also the other side, I guess I should say the other side is to get on the online networking groups. Um, a guy named George Roberts has a great one, and Brian Briscoe. You can look. They're in my newsletter. I list them actually.
What's the group about?
Basically, it's networking all about commercial real estate.
Okay.
Okay. So, and they're not presentations. They don't take the time to do that. There's another one. Tim Mai has a group that is um, a presentation and then networking. Okay.
Hmm.
I mean, we actually had the longest. presentation of that I've seen in 2 or 3 years, and we were talking about AI and generating content and art with AI. And so this guy spent about 3 minutes talking about that, and it was really great.
That was with Tim's group.
Yeah, in the networking group, not Tim's
Yeah.
group, in the networking group.
Oh, okay.
It's kind of an accidental lecture. Okay. And he
Everyone
said,
in all groups are talking about AI. It doesn't matter
yeah,
what group it
oh yeah,
is.
yeah, it's
Real estate, startups, business, entrepreneurship. There's always a discussion about AI,
yeah.
and it should.
And you actually started that in your privy group. I mean, your privy software, there was a lot of AI in there. It was just very focused kind of AI.
Right.
You looked at things and it was very structured. Okay, so now I'm bumping into, people, and I'm saying, what are you building? What are you building? What are you building? So to not just be say, hey, and I can sell you something, I can sell you, debt or equity. I do the first thing, and that's saying, I'd like to look at what you're doing and give you feedback. Okay.
Hmm.
So as we talked about earlier, I've got a new thing called the due diligence dash CRE checklist. Okay. So I kind of use that checklist, which I have in my mind, and I take a look at their overview and see if they really address the mission, the market, the management team, and the money. Their pro forma. Okay. And that's the start. And then let's see if you got a pitch deck that doesn't look like, something a third grader put together. Okay. And make sure that you're not missing something. So I look at the pitch deck to see if it's complete. And then now I can see if there's really a project there
Yeah.
or whether it's just a wish and a song.
And
Okay.
you got a new contact out of it too, right? Because
And
not
yeah,
everyone you talk to is going to have something that is worth digging further into, right?
exactly.
Because you don't want to waste their
And
time.
also done something for them. I've done something for the group. I've given. So
Right.
everybody I think should give first, and then, then say, okay, I've got something for sale. And so right
Yeah.
now I can sell them debt, I can sell them equity. I can also take my due diligence list and say, okay, for syndicators, I can be the guy to go through this very quickly and decide, you know, whether this is a deal or not that you'd even want to look
Hmm.
at. And then the other side is, how about investors? Investors need to go through this process too.
Oh yeah.
So, okay, you got a deal that you're, hot on, you just think it's the cat's pajamas, and let's run it on the list. Let's see if it, qualifies. And there's a couple of big failings that I want to put out there, and that is, you really got to make sure you got a management team who can start it, run it, and pivot when there's a problem. Okay. It's just
Hmm.
like when I talked about the mining, those guys, we could start it, and I did offer my services as what I call the chief capital officer to some people who wanted to start up and get into mining. Okay. Unfortunately, they didn't have the chutzpah to, keep going. And they also made some errors that I thought would come back to haunt us. So I just said, no, I'm not going to do that. But the point is that if you have the team in place plus the contractors to support it, my philosophy is, you got your core team, maybe five, you know, really super well, 20-year people in the business, vets.
Hmm.
But then you surround yourself by really great contractors, property managers, lawyers, accountants, cost segregators, all of those kinds of people, contractors, a great GC, who can do two things. One is support you, but also step in and maybe, okay, we lost a guy, okay, and he was really good in contracting. So I mean, from the construction side, okay, you step in, we're going to promote you up to be a part of our part of our team. Okay.
Yeah.
So now you've got support and possible replacements. It's just like a basketball team. You got
Yeah, next man up.
5 on the court and 10 on the bench,
Yep.
right? And then 5 more in the back room who's trainers, and then you got the whole, the, the head shed with all of those other people. You might have 20, 25 people on your team, but only 5 on the court, right?
Yeah.
And that's that.
The team is really important. You're
Yeah.
so
And
right
that's
about that.
the third ring is also those other people that you might contract with for, that when I said cost segregator, they're really on the third level because you only bring them in once a year, right?
Mm-hmm.
And then your accountant, but he's got to be there and he's advising you all along. So he's in the second ring, or she. And so you really have that three layers. And to tell you the truth, the other thing that I have is kind of my soapbox that I'm going to tell you all about is you really should document that entire team. So when you've got something more than 2 pages to do the mission, market management, money, you really should spend a page documenting all of those people on the team and their LinkedIn profiles, so they can go deeper
Mm-hmm.
and let people know you've got all these people at your disposal. Why not?
Well,
If
it
you,
builds credibility, right? It's not a
yeah,
why not, it's actually necessary because they're going to
it's
vet out the team. You need to, show them like, here's all the people that are going to make sure that you don't lose money.
exactly. And if they don't vet out the team, they're not
Yeah.
thinking.
Well, and some
So
people get distracted by the deal, right? The deal can look really good. The numbers can look good. And so, but they're equal in
sure.
the importance of evaluating the deal is the team, the deal itself, and
Yeah.
then, I guess the market fits into the deal really. But
Yeah. That's, we
that's
haven't
an
talked
important
market
piece.
yet, but I think that's a lot of people are understanding the market is going to make a huge difference. But
Yeah.
we can get into that if we got a few more minutes. But uh, use the analogy. It's like, okay, do you realize that a Formula One car just has a 6-banger in it? It's just a straight 6.
Yeah.
Okay. You can put a strict, you can get as much uh, cubic displacement in a Toyota, the Toyota sedan. Okay. How can they keep these things going at 200 plus miles an hour? And your Toyota, you wouldn't want to take it over 100 miles an hour. Okay. Or use an American version of that. All right. Why? Because you don't have the driver who knows how to push that envelope to the max, right?
Mm.
So that's the kind of team you want. You want a team that can push this engine, this structure to the max and know how to, how you have to make the turns. You have to slow down and then you have to accelerate just at the right time. Otherwise, somebody's going to pass you.
Right.
Right. So you have to know how to do that. And until you put a Formula One driver in the Toyota and you put a Toyota driver or the sedan, let's call it a sedan driver in the Formula One, this guy's going to win.
Yep.
He knows how to do it. He take that screaming machine and get around there very quickly. You're just going to get into the turn and get all freaked out. So that's the driving part. And also what happens if they start to spin? That's the pivot part. How do you get out of
Mm-hmm.
that spin? Okay. And so you get a flat tire. I mean, there's all kinds of things that could go wrong when you're out there racing at 200 miles an hour.
Oh yeah.
Yeah,
And most of the time you can't prepare for all of it. And a lot of these people too are doing it for the first time. So they don't know what they don't know. Like they can't prepare for certain situations because they don't even know what's possible and the different
exactly.
outcomes that are out there,
Yeah,
which is
you
why
haven't
you bring
seen.
in the vets.
That's right. And they don't have the scars,
True.
you know. And you get those scars through experience. And there's a thing that I'm going to go to a little bit later today. It's the 13 mistakes I made in fundraising.
Okay.
Yeah, 13 mistakes I made in fundraising. So why not learn from those guys? What mistakes they made and what they would have done differently. And there's
Interesting.
where webinars are, even though they're going to sell some coaching at the end of it, most of the time. And there's going to be the pitch at the front of how great they are and how much they did. And then there's the pitch at the end, but then there's the middle part, and that's the part to listen to. Okay.
Right. There's always something you can take away from those, even
Yeah.
though they're going
Yeah.
to make a pitch. And, you may be perfect for some coaching, right? I think everybody can use some coaching at some point.
Absolutely.
Yeah.
Absolutely. And if you can get the replay on that, here's a little trick I learned as a computer jock: is use your GPT to make a outline
Mm-hmm.
of the video. So if it's on YouTube or some other place where you can get the transcript, you can actually make an outline of that. But here's the trick, the AI trick, is don't just take the first outline. Tell the AI, go deeper.
Mm.
Then go deeper. Then you get all the detail. It goes from 1 page to 5 pages. All
Right.
right. And then you can read all the detail that's in there. And it usually comes up with a nice little summary and some takeaways and things like that, which you can actually use to, post on that video and post that video on LinkedIn and, be fairly intelligent about that and be very useful. Actually, the more important thing is be useful, because
Mm-hmm.
now you've gone through and used that technology to come up with the takeaways and make sure that the takeaways looks intelligent um, and summaries, excuse me, the takeaways, let's just call it that. So those are
Yeah.
kinds of, the fun things. I'll tell you, anything that's more than about 10 minutes, I just do a summary and read it. And if I have a
Oh yeah.
question,
You got to really spend your time on money making
yeah,
activities and not get too
yeah, the
much into
outline,
the
yeah.
weeds.
Yeah, do the outline and then read it. And if I have a question about it, well, I can go look at the transcript and say, to search the transcript and find that keyword and go look and say, what did they really say here?
Yeah. So
So there's
we're getting toward the end of the hour here.
what we
I
are.
want to talk real quick about the commercial real estate aspect of it. What are you focusing on now in the commercial real estate world, and where are the opportunities that you see in 2025?
Well, obviously it's going to be uh, we're in the stage now where um, we aren't building as much multifamily as we were. Okay, back when the money was cheap, everybody wanted to build a multifamily,
Hmm.
and they came on board. And to tell you the truth, we rent against that, and we saw the competition and what it cost us. Okay, but the 2026 deliveries, the 25 deliveries, 26 and the 27 and on deliveries are diving. So multifamily is going to be seriously hot. Plus, you've got all of those loans due, and the money's still not cheap, right? Not all the loans, but a lot of loans are due. Trillions of dollars in loans due. So, um, some people are not going to be able to do it. They just don't have the cash flow for it. So those opportunities are really, really good. And you can create a nice win-win situation that somebody can wind up with getting some equity out of their property. And you have an opportunity to then upgrade that with some value adds of different kinds and raise
Hmm.
the rent and make some serious NOI out of it, right?
So do you
Um,
come across these opportunities regularly, or is it you're just kind of seeing them here and there?
well, no, I mean, they're out there. But it's just like, blowing my brains out the end of the trumpet. You got to look for them.
Sure.
That's the thing is you can't just sit back and wait for them to come across your transom.
Yeah.
Uh, you need to constantly be looking for those people who are in that kind of business and looking for those kinds of things. And even though I'm a loan broker, and I raise money in a very narrow spectrum. Uh, I really need to convince people that I'm very happy to take a look at their deal and give them feedback. I mean, what does it take me? An hour to look through an overview and to do some analysis and take a look at some of their other documents? Guess what? I learn a lot.
Yeah.
I learn what the state of the art is right now and what people are bringing on board. And so I'm very happy to trade to do that. And then if they, if they don't have their favorite loan broker, their favorite equity raisers, or want to do it themselves, then fine, we can enter into an agreement. Okay. But I like building that, the know and the like part, and the trust as well.
Yeah, I like that.
So, but I'm always putting that out there, and people respond. And then I keep an eye out too. When somebody sends a deal and says, "Hey, we're going to have a webinar on our investment," guess what? I put as many of those on my schedule as I can. Because I
Okay.
want to find out
So
what
that's
they're
something
selling.
good for the audience here, is that that's one way that you could potentially add value, is that you're looking to evaluate deals,
Yeah,
right? And so if someone in the audience has a deal that they're looking at, whether it's a commercial real estate deal or maybe even a startup or a business opportunity, you would potentially want to look at that.
I want to look at that. That's right. And like I said, it's a learning experience for me, and then it's an opportunity for us both. And
Very cool.
so I like to look at those and evaluate those. And so we can do like I said, the evaluation both for the syndicators, cut down the number of things that they have to do to find the great deals, or the investor, make sure that he's got a deal that is really going to work.
Yeah, that's awesome.
Yeah.
Well, Ken, we've had a good discussion here today. We covered a
Thank you.
lot, all the way back to when you started, and all of the growth through all the different business ventures that you've done, and the entrepreneurial things. I didn't even mention about your 6 books that you've written, and some of the exciting things, but we only got limited time. But really do appreciate you taking the time and being with us today. If someone wants to work with you, or maybe they want to get on your newsletter, where can they find you?
Well, great. My middle initial is H. And so if they look up Kenton H. Johnson on everything from Skype to LinkedIn to Facebook to whatever, they're going to find me. Okay.
Okay.
I've got that ID locked down. And so look on LinkedIn, or linkedin.com/in/Kenton H. Johnson, then you're going to find me. That's a great way to start, because in the contact info, once we connect, you'll find a lot of other things. And of course, I'll be, posting a lot of good things too.
Awesome. Well, Kenton, thank you again for spending time with us. And everybody,
Thank
thank you for
you.
listening to this edition of the REI Hacker Podcast. Keep an eye out for more amazing guests, just like Kenton Johnson
Thank
today.
you.
And we're going to be talking about entrepreneurship and business and real estate investing, and just hopefully giving you some tips and some tricks and some inspiration to go out there and create your own opportunities and your own wealth,
Great.
and hopefully create a positive future for yourself. So thank you again for listening. Thank you, Kenton.
Thank you very much. A very, very big pleasure having the chance to work with you again. And I'm looking forward to working with anybody else who likes to have things evaluated and vetted.
Amazing. Thank you so much.
All right. Good day.
That's a wrap on today's Real Estate Revelations. Thank you for tuning into the REI Hacker Podcast. Remember, every property has a story, and every deal is a lesson. Until next time, keep hacking the real estate world.